Hello again. Welcome to the Alpha Wave Trader Monday morning update. I'm actually recording this on Friday because our office is closed for Australia Day, so happy Australia Day to you. So I haven't seen the trading on Friday night in the US, so the market could be in a very different spot by Monday morning. But just looking at the current situation there, I thought it's an interesting little case study to show you sort of how these waves behave and you know, in making some sort of a prediction on what you think might happen, that using option strategies can be a useful way of going about gaining exposure. So just going to have a quick discussion of a potential option strategy, not as a recommendation, but just in discussing these things. So looking at the S&P on this weekly chart, obviously we have quite a sharp downtrend possibly taking shape, and you know, it may just revert into a big uptrend again, no doubt about that. But while we have that downtrend in place, there's a good chance we're going to see some selling pressure come out of the woodwork at some point, and which will just give traders enough time to take some profit on a position and become free curried or do whatever they need to do. Because even if it's going higher, there's a lot of resistance coming in up here for the S&P 500, just huge amount. So even in the short term, if it looks like, you know, it might even have a good night on Friday, it really is heading up into very stiff resistance. So I'd be surprised for it to be able to get above 2800 in the short term without meeting some pretty stiff selling pressure. And even if it is going to end up heading up there, you should have plenty of time to you know, create a trade out of that reaction. And looking at all the different levels to watch out for, you know, you're just looking at the actual previous wave down, and then we have the sell zone of that wave there, and midpoint, which we currently have gone through, and the buy zone where it could come back to if it sells off before heading up again. So they're very important levels that you're looking at there. And also we've got the rally up from 2016, and we have the sell zone of that there, and you can see that we've actually sold off to the midpoint there and are rallying back currently into that sell zone. Also the point of control, you know, the really important point around which all this price action was oscillating, and we've hit that 618 level outside the range, which is where massive support usually is, and we've raced back to that point of control, and around there is where so much trading has gone on. There could be people who are short or long through there who'd be happy to sell out, having gone through a bit of a scare. So usually there can be a lot of resistance around that point of control. So all the way up into this area, all the way up towards that 2800, which is the high of that last wave, there should be some pretty stiff selling pressure up there. Don't know how far it can go, but I'd say if it does have another leg up Friday night, that 2700 to 2750 area, I think will end up capping it, and we'll end up seeing a bit of a pullback. And when you're looking at the pullbacks, if it does end up turning back around, you can then be looking at the wave to the upside, and as it pulls back, you're looking at that midpoint as a good area where it could pull back to. And you're also looking at, you know, this whole wave here, and which is showing you the, you know, sell and buy zone of that there. Very easy for it to end up pulling back to the buy zone of that whole wave and still be going up. And since the market can still actually trade higher before turning back down in a big way, rather than trading futures, you can consider options. And you know, a way of looking at this would be, you know, if we are going to get this sell-off, you wait till the market has turned back down, giving you some indication, and then buy out of the money puts with a strike where you think it can get to on the move. And then when it gets there, let's say you've bought 2 puts, you could sell one of those puts and buy a call. And from that point forward to expiry, you can actually make money whether it rally or falls. You've just used the technical analysis ideas to help you to get into a fairly cheap, very cheap, could be free, straddle around that strike price. And from that point is a very high volatility point, because if it does pull back to here and find support and we're heading up, this next leg can be huge. But also if we fail and the market can't hold up, I mean, under here is a bloodbath, and it will head straight to that larger buy zone of the whole wave up from 2016, which is down near 2100. So there's the chance of some really big moves coming up, and trying to work your way into cheap straddles by picking a target where you think it can get to, but using the technical system to guide you in when to act, and can just be a really great way to gain exposure. And if you get 1 or 2 of those and the market has a really big move, it's not a bad outcome at all. Alright, well that's all I really wanted to go on about today. I don't want to take up too much of your time, and it's definitely an interesting setup in the market, so I think traders will enjoy this year. It's going to become pretty volatile, and I reckon we're getting pretty close to some sort of peak in this S&P before a corrective sell-off. I'll come back with more next week.